Hello there, and welcome to the Bitcoin Takeover podcast. This is season 17, episode 15. I am Vlad. This episode is sponsored by SideShift, Brains Hash Power, Bitcoin.com News, Layer 2 Labs, and Firefish, and Cake Wallet. There's gonna be a giveaway about 1 hour into the episode, so stay tuned. And until then, pick a number from 1 to 100 in the chat. You only get to pick one number, and the winner gets one Zcash. And our guests today are Danny and Chad from OPNET, which is this new Bitcoin layer or protocol. I'm not even sure what I should call it, but it promises to offer smart contracts on layer 1 Ethereum level without wrapping, without sidechains, without bridging, without any of these techniques, which seems sort of mandatory in the context, but you guys came up with something different, which got a lot of hate, which makes me like it even more. So it's good to have you, Danny and Chad. Let's talk about OPNET.
Yeah, nice to meet you, man. Thank you for having us. Yes, what to call OPNET? That is a thing that a lot of people are confused by. The term that has been used to call things similar to OPNET so far has been meta protocol. We have coined the term consensus protocol because we fixed the one issue that all meta protocols have, which is consensus between the states of these protocols that are on Bitcoin. So like a meta protocol are things like ordinals, runes, BRC20, et cetera, et cetera. This is where you're putting, it's a very, very, very simple concept. It actually even goes back to like 2014 with Mastercoin and all sorts of other stuff. But basically, you're just putting arbitrary data into Bitcoin transactions, and then using an off-chain indexer to, say what that on-chain data is doing and keep track of the state. And when you're doing stuff like ordinals, it's very simple because this stuff is just NFTs. So there's not like a lot of math to kind of keep track of. There's really just this image and then where is that image living. But when it comes to DeFi or smart contracts, there's a lot of math that is involved in these smart contracts and kind of keeping track of all the state of these super complex things. So there's been this big problem of none of these other meta protocols can do all of that math and come to the same deterministic state. There's no consensus between them, and that's what we've made. So we have smart contracts on Bitcoin layer 1, with no bridging, no side chains, no gas token. It's all just Bitcoin.
Okay, so it almost sounds like Counterparty, which is something that I played with a few years ago, except that you have EVM compatibility. Am I right?
Not exactly. So it's Counterparty might be a close comparison, but Counterparty required you to hold their gas token in order to transact. It effectively, I mean, that I guess would probably be the closest thing to it. But the difference here is that with OPNET, you're only ever making Bitcoin transactions. So you are not needing to hold any other asset. You have Bitcoin in your Bitcoin wallet, and you're able to connect the dApps and use the dApps and interact with smart contracts just by using your Bitcoin in a Bitcoin wallet. There's no added steps. There's nothing else to interact with. So I would say that would be one of the core differences between something like Counterparty and this. And it's actually not EVM compatible directly. It's a WASM virtual machine build. And so the smart contracts are not Solidity. There's a few quirks about EVM that are really not optimized towards Bitcoin. And so we built a custom VM that acts and mimics a lot of the pieces of EVM that are great. Like a lot of the endpoints are very, very similar. The developer experience and environment's very, very similar. But the smart contracts are written in TypeScript, not Solidity. And there's Rust compatibility. WASM compiles to like 30 different languages. So you can build compilers to other languages as well. So it's more modular. And then we built it with Bitcoin in mind. So the gas handling is slightly different. To the layman, it'll look and feel ETH-esque, but the backend is a little bit different than Ethereum, but it's modeled off of ETH. So that's the long explanation.
Yeah, so it sounds a lot like Counterparty, except that you don't have the XCP token. And I was gonna ask you, like, what are the limits of this system? Because obviously you're gonna have on-chain transactions. I guess your transactions are using up return to insert data onto the blockchain, and this data.
No, sorry, we don't use op return whatsoever.
That's another difference between Counterparty, for example.
Interesting.
Yeah. So go ahead, Danny.
Yeah, so we use the witness field, and everything is a standard Bitcoin transaction. So there's no like tricks around the ordering of the opcodes. It is all fully compliant. It works on Legacy, it works on SegWit, and it works on Taproot. So it's not dependent on TapScript. Obviously, we like the transaction refund, so it's the cheapest way to do it. But it does work with Legacy as well. Yeah, and yes, there is no. You said the limitations of this are basically the limitations of Bitcoin. So the speed of an OPNET transaction is the same speed as a Bitcoin Layer 1 transaction, because it is a Bitcoin Layer 1 transaction. The amount of transactions that can happen every block is limited to Bitcoin's limitation of transactions per block. So yeah, it's fully Turing complete. It is capable of doing the same kind of execution as any other smart contract chain, like the EVM or Solana, etc. But it is just limited by Bitcoin's limitations, because we built this to work on Bitcoin Layer 1 with no sidechain.
Yeah, sorry for the cat interruption. I don't know what this boy wants. Now he's scratching my lap and biting me. Anyway, what was I gonna mention about this? So you're not using upper turn, you're
That's
not
right.
using EVM. So from this point of view, you're different from both something like Counterparty or Omni, and also something like Citrea, which uses the EVM and fully embraces it.
That's right. Yeah, I mean, I would say, other core differences is that we're leveraging a lot of Bitcoin's native scripting, where some of these earlier meta protocols didn't take advantage of the scripting that Bitcoin has natively. There's a lot of pieces to the OPNET architecture that are thought out and designed really to, maximize what you can do with BTC. So again, leveraging Bitcoin's native scripting, we're taking advantage of a few elements of Bitcoin that haven't really been utilized fully. For example, like all the smart contract addresses, when you're generating a smart contract, when I'm deploying a smart contract, right? A brand new address is created on Bitcoin that holds that smart contract. That address is a specialized address type that then users are interacting with that Bitcoin address, sending their contract call data through Bitcoin transactions to that Bitcoin address. And so again, like the state is fully deterministic, and that allows for deterministic execution to happen on the node side. And so again, there's a few quirks, but there are a lot of these pieces that differentiate it from something like Omni using that the sequencer model, or something like Counterparty that just stuffs all of this data into op return. You don't have this like fully recreatable state that's immutable on Bitcoin. So it's
like client-side validation, or it's unique endpoints that you're trusting. Like, okay, with ordinals, right? Magic Eden just shut down, and everybody in the ordinal space was freaking out because all of this like collection data is all on Magic Eden servers. That is, giving the ord endpoint with all of their stuff layered on top of it, but none of that's actually on chain.
Right. The irony of a lot of this stuff, like ordinal, for example, is that all this data is on chain, but all the ownership of this data is completely off chain ownership. So again, and you have to rely on a centralized point to be able to interpret this data. So it's like you can't own, for example, with ordinals, they're telling you that you're able to put data on a Satoshi and then you own that Satoshi. That's not how Bitcoin works at all. That's only works
through the lens of ordinals. That's the meta protocol. So that's why we call this a consensus protocol, because there is a deterministic state that is posted to Bitcoin through all of these transactions, the bytecode of the smart contracts themselves and the call data for interact. This entire state of the OPNET network is recreatable from 100% of on-chain data, where anyone will get the exact same state as the next guy. If I were to run an ordinal client today, that uses like an older version of the ORD client, or
you just edit your own ORD client.
I can edit, yeah, and I will still like be a valid ordinal client provider. Like there's no ordinals network, right? There's just individuals who run the ORD client,
and you
and
just
then
hope
yeah.
hoping that this guy's ORD client and that guy's ORD client, if you're a wallet provider or a marketplace, you're just praying that these guys have the same client version, or they haven't edited their database locally. So you're relying on these like individualized points of risk or centralization. It's very brittle and it's fragile, and it doesn't. You're not able to do anything complex, and that's why there hasn't been anything that complex that has emerged from stuff like ordinals, which is, you know, that's really where we came in, and we decided as soon as we saw this emerge, this ordinals tech emerge, and we were interested in like, okay, we want to invest in Bitcoin DeFi. We want to see kind of Bitcoin advance in terms of what can I do with my Bitcoin as an asset. And we were excited about ordinals early on until we really dug in. We realized the only thing that is going to be able to be viable here are just NFTs, which NFTs can be very fun, but there's boom bust cycles for this stuff because it's just pure speculation. You're not able to build anything that really provides value to the Bitcoin asset or the wide range of.
Well, there's also, there's just clear like PMF for doing stuff on Bitcoin layer 1. Like if NFTs on Bitcoin were able to get $5 to $10 billion market cap combined, and then BRC20s, which was like just the most basic version, it tokens but no DeFi, that was another $10-15 billion of cumulative market cap. Imagine what happens when there is Uniswap, Aave, stablecoins, Ohm, et cetera, all of these great DeFi games from Ethereum. Like you've already done NFTs and shitcoins on Bitcoin. That was enough to bring $20 billion of value cumulatively. What happens? There's probably 5 times that amount is interested in playing these DeFi games. There's another air quote for you. These DeFi games on Bitcoin layer 1. And just nobody's been able to do it yet because you can't, to have this model that works for BRC20 and ordinals, to do it for smart contracts, you need consensus, and just nobody's ever been able to do that before. So, yeah.
And it's built to scale too. It's built to scale past just DeFi. It's built to scale towards institutionally friendly activity. Guys like Michael Saylor have been quoted many times over the course of the past few years, demanding tokenized assets on the blockchain. What blockchain will they use for that? Ethereum, Solana? Bitcoin should be a viable option for tokenizing equities or debt or real estate or whatever.
I'm sorry, but nobody gives any of these people who want to tokenize assets. They're never going to use like Citria to do that because there's no liquidity on Citria. Why would I tokenize $1 billion fund and then put it onto a chain that is like kind of tied to Bitcoin, but it has $10 million worth of TVL? Like nobody cares about that. Everybody wants to, when they say they want to tokenize stuff on Bitcoin, they want the asset to be able to interact with Bitcoin immediately. Like all of the Bitcoin on Bitcoin layer 1, not the small amount of Bitcoin that's in this L2, the small amount of Bitcoin that's in this sidechain, the small amount of Bitcoin that's in this wrapped Bitcoin on another. Like they don't care about that. They want liquidity.
That's been the problem with every layer 2 so far on Bitcoin that has not been a payment focused layer 2, is that they just fork Ethereum and they build a bridge to Bitcoin. And, you know, some have more complicated mechanisms for bridging or posting data back to Bitcoin, but in reality, the experience is much closer to using Ethereum and having a bridge to BTC than, I mean, me as a user, if I'm just looking at the actual user experience and I have BTC right now and I'm interested in bridging off of Bitcoin, which every Bitcoin layer 2 is asking you to do. The question I have to ask is there a bigger opportunity for me in terms of liquidity or application use case or whatever in just bridging to ETH than going to a Bitcoin layer 2? As of right now, the answer is yes. Like ETH is a much better Bitcoin layer 2 than any existing Bitcoin layer 2 solution, because my first step is I leave Bitcoin regardless. So if I'm leaving Bitcoin, I'm not even using BTC anymore. They
don't give a shit about the roll up being posted to Bitcoin. Like nobody actually cares about this stuff. They care about liquidity. They care about security. They care about where, especially when you're talking about the big money that likes Bitcoin. Right. If MicroStrategy is going to tokenize somewhere, they're going to do it on Bitcoin layer 1.
Yeah. I know that's a long rant.
Well, yeah, you, Chad, mentioned the magic word there. And before I mention what the magic word is, someone asked me in the chat if I see the chat. Yes, I do it. Yes, I see it. And you should choose a number from 1 to 100 to participate in the contest, which I'm going to mention more about in a few minutes. But you, Chad, mentioned the word scaling.
Yeah.
And you're still limited by the 4 megabyte block size limit. And
Yes.
you're still limited by the 10-minute block time. And
course.
how is this going to work in a high fee environment where maybe some participants are going to have their transactions stuck in the mempool for a long time?
Yeah, absolutely. I mean, there's a few answers to this question. I mean, it's obviously this is a huge question on Bitcoin in general. I mean, this is not even a question for us per se, but just in general, Bitcoin gets adopted on a global level. How are 8 billion people in the world going to use Bitcoin if you only have 6,000 transactions per block, right? Every 10 minutes. It's not our limitation, it's Bitcoin's limitation. So our idea here is that we're building functionality before scale. What we've seen over the course of the past 5+ years is a disgusting level of inactivity on Bitcoin, people not using the Bitcoin blockchain, which the Bitcoin blockchain was built to be used. That's what it was designed for. People are supposed to make Bitcoin transactions. And if people aren't making Bitcoin transactions to pay for stuff, if that is not, which they're not, right? It's not my opinion. That's just what we've seen over the course of the past, let's just call it 5 years. If they're not making Bitcoin transactions to pay for stuff, then who is using the Bitcoin blockchain and why are people using the Bitcoin blockchain? And even around the scaling conversation, we have, there's a million different arguments in the scaling conversation, but the problem is we've never seen Bitcoin at any time recently being in a position, except for during the peak of Ordinals hype, be in a position of sustained high fees where there's even demand for scale. There's a theoretical demand for scale where we all know that 8 billion people can't transact on a network that does 6,000 transactions. But there's no way for, there hasn't been a period where there's been like a year or 2 years or 3 years where every single Bitcoin block has demand for that block space. And so what happens in a high fee environment, again, our mandate has been in building this protocol, build reasons why people may use the Bitcoin blockchain. And it can't just be because people want to make shit coins. It has to be because people can build stuff that provides enough value to Bitcoiners or people who hold the Bitcoin asset that they're interested and there's an economic incentive for them to make Bitcoin transactions. Once we see an extended period of time where there's high demand for block space, one, I think that the type of activity that is non-desirable to a lot of Bitcoiners inevitably sort of gets priced out of the market because, what take it down the line of theoretical possibility here. You have, stablecoins on BTC and lending protocols and all these great DeFi aspects. And then people come in, major players or institutions start tokenizing assets on Bitcoin. And huge liquidity starts flowing into the system. A lot of the less valuable activity, if it's going to be $100 to make a Bitcoin transaction, only the highest value transactions are going to be on layer 1 Bitcoin. And then again, the question around scale starts to get asked here. And, we don't want to take a political position on putting forth a change to Bitcoin that actually, allows for more transactions on BTC or any scaling solution for Bitcoin itself. We built this protocol. We have ways that we can scale the protocol itself natively. We have ways that we can scale the protocol vertically or horizontally. And if there's enough demand for a change for Bitcoin to be made, it's a net positive for the protocol, of course, because it allows for more throughput on layer 1. And that is sort of our position is, we're building functionality before scale. We're creating demand for making Bitcoin transactions and using the Bitcoin blockchain and building applications that provide value to Bitcoin. And the scaling conversation, if it gets ignited from there, is something that I think is for those who are heavily invested in, the future of Bitcoin and how they want to see Bitcoin scale. It's for the community to really decide on what's the best option for BTC in the future. Does it mean that any Bitcoin as payments solution is just shunted to the Lightning Network and the Lightning Network gains a ton of adoption? There's, it's a total ossify movement. The fee market on Bitcoin just totally levels itself out in terms of the type of activity people are doing, and all the payments just go to the Lightning Network, and that's where you're transacting for Bitcoin with Bitcoin in a cheap way. If you're trying to buy your bananas and stuff, that might be a possibility. It is a BIP that changes how the speed or throughput of Bitcoin. That's I guess that's the answer. It's a long answer, but that's the answer.
You actually got a couple of very interesting questions from the chat, like very specific. I'm not sure if you guys asked your friends to ask questions, but
No, we
No.
they're quite interesting. There's someone named Tengen Node, and he says, "Hi Vlad, is the OP20S basically MakerDAO but native to Bitcoin? And how do you deal with those 10-minute wait times for liquidations?"
Wow, that is a very specific question. No idea who that is. Great question.
You check the documentation.
Yeah, OP20S. So, okay, I'll explain what OP20 is first. So, OP20 is the token standard for OPNET tokens to be issued with. It's based off of the ERC20 model and what it does, but it's not a fork of it. It actually has some improvements. But it's just a standard token model. OP20S is something unique that we created that is essentially an extension of the OP20 base token standard that is specific for stablecoins that wish to interact with the native swap application that we've made, which allow you to swap Bitcoin for OP20 tokens. And so basically what this does is it allows you to set an oracle price for your stable coin. And you can call this every 3 blocks, every 10 blocks, every block, whatever, and essentially set the peg of that token to the price of what Bitcoin is to $1. How many sats is $1 in BTC? And then that will allow the native swap pool to always be priced at $1 in BTC, which therefore allows you to have stablecoin swaps for the first time ever on Bitcoin Layer 1, which really is like the mass unlock moment for everything we've been talking about, where people are going to start using this and blah, blah, blah. Like the story we're telling is great, but the actual use case and liquidity and opportunity to make money comes with stablecoins and BTC. That is a multi-$100 billion market that has $0 in TVL right now. Like that it is insane that Bitcoin has, call it, between $1.5 and $2 trillion of market value, and there's no way to swap a single dollar of Bitcoin into a stablecoin without using a different chain or custody of some sort or KYC. Like, there's no trustless way. There's no way to stay on Bitcoin and swap 1 BTC for however much that 1 BTC is worth in dollars without leaving Bitcoin. And so that to me feels very naturally like a wow, this technology is offering more freedom to Bitcoin holders. Like that is what we are truly after. Like if you compare Bitcoin to any of the other cryptocurrencies or blockchains, whatever, with the exception of Bitcoin forks like Litecoin and Bitcoin Cash, whatever, every other chain has way more freedom. If I'm a holder of Ethereum or Solana or even Binance, like BNB, right? I can at least do stuff with my money and I don't have to custody or KYC myself. Like I can go swap my BNB for $1,000 in 1 second and it's done. I just go to Adapt, I go to PancakeSwap and I do it. For Bitcoin, that is not an option. And so like Bitcoiners have no freedom. They're not able to do anything with their Bitcoin that doesn't require trust. And the whole point of Bitcoin is don't trust, verify. Like that it's just this very core value that I really don't see why anyone would be against this as a concept. Like this is a net positive thing for Bitcoin and crypto. Like this is allowing Bitcoin to be used in more ways. And that should just bring everyone back home to Bitcoin, because nobody's building any app stuff. They're just building blockchains, and there's nothing cool happening.
Yeah, and the wider world of non-Bitcoin ecosystem stuff, there's very little of interest going on in terms of what are people building, what are people making. I mean, the dominating narratives are stablecoins are getting wide adoption globally, and Bitcoin is getting adopted by institutions and governments, and those are the dominating narratives. There hasn't been a ton of interesting innovations outside of perp dexes, which already existed, but they made better perp dexes, and then prediction markets. So if those are the primary use cases for this technology, which essentially is, I mean, what are we talking about here? Gambling. a different form of gambling, strengthening fiat currency, and then Bitcoin, which is like this ultimate decentralized technology. I would say that there's one out of all of those that I think is interesting to me, at least. And that's really, that's where we want to focus. That's where we want to advance the plot. And I think while a lot of the non-Bitcoin chains have done a lot of interesting and really cool things, at the end of the day, I mean, I think a predominantly dominant narrative earlier in Ethereum's development was, okay, well, great, ETH will do all this stuff, and then eventually it'll all make its way back to Bitcoin. I know the maxi mindset has shifted, I guess, since then. But at a certain point in time, that's what Bitcoin maximalism meant. And to us, I mean, to me, that's what it means, is that all these great innovations that exist on non-Bitcoin chains, they were test nets and test versions for what does have product market fit. And it's very easy to identify what kind of applications. So to answer that guy's question about the 10-minute block times and liquidations, I mean, it's up to developers to figure out ways to mitigate and design good applications and good protocols. We know the basics of what works because we can look at ETH or Solana and say, hey, these applications worked, these applications didn't. This had major hacks. This was a terrible idea. That was an amazing idea. You can literally just build that for BTC and do it in a way that provides value to Bitcoin holders and to the blockchain itself. So, I mean, it's kind of a non-answer, but that is the answer, is that it's up to the developers to develop something amazing. Like, that's the value proposition here. We're not paying people to develop on this protocol. The value proposition is if you can build something that really provides value to the market and you build it well, you're building on the chain with the most users and the most liquidity.
Okay, that sounds nice, but you, Danny, made a statement that there is no way to swap BTC for a stable coin without doing KYC and without leaving the chain. I mean, technically, let me put on, so I've been searching for hats around me, but I can't find any hat. I was gonna put on my Bitcoin toxic maximalist hat and say, there's Liquid. And for some people, Liquid, even though it's a trusted federation that has trade-offs, for them, Liquid is Bitcoin. And there's some USDT on Liquid, and I looked it up right now on the tether.t website. Under the transparency section, it says that there is $97 million that was authorized on Liquid.
Yes.
But there's in circulation only 33 million, which is abysmal. Like, if you look at how much of it there's on Ethereum, there's $93 billion. On Cosmos, there's $100 million. Where's the big one? Solana
Tron.
is $3 billion.
Tron's got all
is $84.6 billion, and maybe it's changing from day to day. But my point is that there is sort of a Bitcoin layer-ish, which is not a sidechain, like not in the true sense, but it's like a separate blockchain that uses BTC, the token, and you can swap for USDT there, presuming that if the federation allows you to join and then leave with the money, because that's another
issue. Well, what if I want to swap more than $30 million? Like we're talking about Bitcoin here. $30 million swaps happen on Ethereum, relatively often, especially during the bull market. If I'm a Bitcoiner and I want to use Bitcoin DeFi, 30 million USD in Bitcoin is like what? Less than 400 Bitcoin, right? If I want to swap 500 BTC for a stable, I have to go to the Liquid network. I have to bridge from Bitcoin to Liquid. And then, like what I was saying before, is that the liquidity fragment of all of these Bitcoin layer 2s or whatever, it just defeats the entire purpose of interacting with Bitcoin in the first place. The whole point of doing Bitcoin DeFi is to have access to the Bitcoin liquidity in essentially as minimal blocks as possible, right? So if I have to go from Bitcoin to bridge to Liquid, that's going to take probably 5 to 10 blocks, especially for a $50 million bridge. And now I'm on this other chain, and then I have to hope that my exchange supports Liquid USDT. Like it's so many trade-offs versus I have a stable coin of Bitcoin layer 1. I want to swap $100 million with the Bitcoin for USDT. It's there, and I'm done in less than 3 blocks.
You named it as well. I mean, at the end of the day, you're bridging. You're leaving BTC. Like, I really respect the Liquid guys. We appreciate. I appreciate what they've built, and a lot of really respected Bitcoin devs had a huge hand in building that. But at the end of the day, I mean, again, like, what's my first step is I leave BTC. So to a lot of, I mean, there are Bitcoiners who use Liquid 100%, and they've done a good job of building out their ecosystem. But at the end of the day, like, okay, if I'm a major institution, for example, I don't have the ability to go and interact with a bridge when it comes to I'm using other people's money. I'm custodying money for people. I don't have the ability, if I'm trying to access yield or make my Bitcoin become productive in some way, shape, or form, I don't have the ability to interact with a bridge. If I'm a holder who has a lot of Bitcoin, the first step being a bridge is it's a massive amount of risk. I think the point Danny was really trying to make is that, you know, there needs to be a way to do this without giving up any added trust assumption and without compromising in any way, shape, or form. That's really the idea.
Yeah, I was looking at Liquid right now. It's a ghost town still. Like they have like 10 transactions per block. For the amount of money that they raised and the amount of effort that they put into this and the marketing that this got, I think it's really disappointing. But then again, it's none of my business. Let me put on my other toxic maximalist hat that says I'm running Lightning. And there's gonna be at some point some sort of tether on the Lightning Network. They're working on it. They have been working on it. It was supposed to be RGB first, which is sort of this layer on top of Lightning. And then Lightning Labs decided to do something that was initially called Taro. And then they changed the name into Taproot Assets.
Yep.
I haven't heard much from this. I don't know if it's happening. I don't know if it's coming, when it's coming. But if it does come, and people say that it's technically superior to using the Bitcoin base layer because it's faster and supposedly it's going to have lower fees and somewhat of a better privacy, how are you going to respond to that?
Sorry, it's totally missing the mark because this is still on, if things that are Taproot related are thinking about crypto for payments. Nobody, that is like crypto 2011 meta, right? That is clearly not what anybody is using crypto for on a mass scale. They're using it for financial instruments. They're using it to recreate financial markets. And whether people like that or not, that is what the majority of crypto is used for. Like specifically on the Bitcoin side, probably 99.99% of the volume done across Bitcoin, the asset per day, is done in some kind of trade. It's not people sending Bitcoin to pay for stuff. Like, just nobody's doing that. Tether is the same way. Everybody uses Tether to trade with. There's very few legitimate like day-to-day businesses that are using Tether as a payment option. Like, it's for trading. That's what a majority of all these assets are used for. And so Taproot assets, or even just I'm not going to call them out specifically, but just like the idea of putting Tether or any stable onto Lightning is totally missing the mark, because you're not going to be able to do DeFi with it still. Like, there will not be, what you're not introducing is a fully smart contract programmability layer into Taproot as well. Actually, I believe this is what Arc Labs is doing. That's why I find them actually kind of interesting, because they're like trying to work out a programmable version of Lightning, which I think that is that's just a whole better idea than the entire idea of doing Lightning the way that it is now. Like, let's say Tether issues, or USDC, or whatever, MakerDAO, whatever, issues a stable to Tether. Okay, great. Now I can, in this very niche and illiquid, layer, I can send $10 of Tether from me to my coffee guy. Like, who cares? Nobody cares about that. At least the majority of people don't. The majority of people care about making these markets more liquid and bringing more functionality or opportunity to the asset Bitcoin and assets that are based upon Bitcoin.
Yeah. So, okay, for example, like, the profile of the Bitcoin holder has shifted significantly over the course of the past few years, right? You have all these institutions and governments, and it's getting more and more like that. And the demand for Bitcoin becoming a more productive asset, or dare I say Bitcoin yield, is growing and growing and growing. The options for Bitcoin yield as it stands right now are nearly non-existent in a system that is revolving around Bitcoin itself. There are options for Bitcoin yield in terms of financial engineering, So something like how Michael Saylor does it, where it's not open to the public to do this, right? This is something that he can do with his company. And we saw a lot of other DATs try to do it and then not have as much success. So it's clearly something that is open to him, and then he can issue financial products that other people can buy that are taking advantage of his financial engineering. Or you have to engage with some sort of centralized counterparty or middleman in order to either put your Bitcoin up as collateral or take a loan out against your BTC. That's a really basic function of the stock market, let's just say. For someone who holds, let's just say, $20 million worth of an asset, they can go to a bank, they can get a loan out against that asset. They don't have to sell their underlying, but they can still have liquid value without having to realize the tax hit on it. I mean, this is what something like Aave is so awesome at doing, is allowing for you, the user, to not have to sell your crypto. You can just take a loan against it, and then you're not engaging with a centralized party. It's a decentralized system. So it's amazing, right? Like, that is one of the coolest things that exists, I think, out of blockchain technology. And the fact that you can't do that with Bitcoin is, one, I think it's a massive market, and two, it's just one use case for having a stable coin within a Bitcoin ecosystem, right? It's not that everybody who holds Bitcoin is just dying to swap it into a stable coin, because again, you're essentially selling your BTC in that case, right? It's one, of course, having the option to escape Bitcoin's volatility while staying within the Bitcoin network, I think, is valuable. Two, having access to a stable value on BTC allows you, if you have an application development environment, allows you to build applications that take advantage of both of those things. And the third is at scale, there's a lot of other more complex financial products and tooling that can be built if you have both of those things within the Bitcoin network itself. So that's sort of, again, just to highlight Danny's point in terms of stable coins on Bitcoin being used for payments. I also I tend to agree. It's a little bit missing the mark in terms of what I think the overall total capturable market for this really looks like.
I can already see why the Bitcoin nuts people will not like OPNET. And there are two reasons. First of all, you're all for financializing Bitcoin, and you believe that there's a market for stable coins. And they're going to say, wait a second, Bitcoin is the money, and it's the only form of money that we want to have on this network. They don't want any sort of competing token or something that may or may not change the incentives of the Bitcoin miners. Because that's another conversation to be had, whether or not, or what happens when you're going to have these tokens which become more valuable than BTC itself, and you're going to have a large transfer which is larger than the block size, not the block size, than the block reward that the miner gets. And in that situation, you're basically creating an incentive for the miners to try to reorg, double spend, try to steal, act in some sort of dishonest way. And the other reason is that, of course, you're adding data that they don't like. You're basically inscribing smart contracts, or not smart contracts, but the smart contract data, which is gonna interpreted off-chain. You're putting that onto Bitcoin, and they think that this is spam. I'm gonna let you defend yourselves on these 2 points, that you're spamming the network, and you're creating like another kind of money on the Bitcoin chain, which is not BTC.
I just don't care, is I would say, first of all. I literally don't care what these people think. I've been in Bitcoin since 2013, since I was a kid, and Bitcoin to me means freedom. And so if you are able to do this stuff and abide by the laws of Bitcoin, which are set by the code of Bitcoin, which is set by consensus, right? Then it's fair game, and Bitcoin doesn't care about your feelings, and neither do I. So spam and that whole definition of that, that's like it's an argument that I try to not even get into it, because it's just it's nonsense. It's completely nonsense. Secondly, I would say the BIP 110ers are an extremely vocal minority. I mean, a lot of these people are not the people who actually call the shots on Bitcoin. These are not like massive Bitcoin whales that share the opinion that Bitcoin is money or blah, blah, blah. This is like a cult that is just very loud. They've been around for a long time also, well before it was called BIP 110. These people have been kicking around. So yeah, we just don't care. Like, you're allowed to do this, and this has been tried by many people since the inception of Bitcoin, basically. Yeah, like OmniLayer, Mastercoin, that stuff was awesome. The only reason why that kind of fueled for experimentation stopped on Bitcoin Layer 1 was because when Vitalik came in and also tried to do this on Bitcoin Layer 1, he decided, this place A is toxic, and they're running around, the devs are running around like chickens with their heads cut off. Like, in 2013 Bitcoin, it was way worse than it is now. You couldn't get anything passed, and it was just nothing was happening. So he left to make Ethereum on another blockchain, and it worked, and it works well to this day. It's the best smart contract blockchain, right? Is Ethereum. And so yeah, the want to experiment and kind of make this happen on Bitcoin Layer 1 just went away by the majority of people. But there's always been like a niche amount. Like you brought up Counterparty earlier. That's another. There have always been a handful of attempts to do smart contracts on Bitcoin Layer 1, or at least in a way that is close to Bitcoin Layer 1. And yeah, we believe that we've made the one that is actually Bitcoin Layer 1. We've tried to take as many lessons that we could away from the previous attempts. We're very well versed in all of the other attempts to do this. We know what worked from them and what didn't. And we think this. We love Bitcoin. We really love Bitcoin. If we didn't love Bitcoin, we would have just made a Bitcoin Layer 2, made a gas token, and rode off into the sunset like the 100 other Bitcoin Layer 2s over the past year did, right?
Yeah. Also, by the way, to emphasize to provide an alternative response as well in terms of spam, right? More willing to engage in a spam conversation, but from my perspective, and from a lot of people's perspective in the market, when it comes to spam and the argument around ordinals specifically, is that ordinals are bloating the UTXO set. So whether that is negligible over time is a different conversation, but the way that the ordinal protocol works and why this is even a relevant conversation right now is that every single ordinal is like a minimum size UTXO. And your ownership of that asset is tied to this UTXO. So everyone just holds these tiny UTXOs in their wallet. And the size of the Bitcoin blockchain explodes in terms of the amount of data that you're carrying, that's, in my opinion, the spam argument, the FUD on the spam argument is that, yeah, that's bad for Bitcoin because it makes it more expensive to run a node. Okay, understandable. I'm with you there. Merits of ordinals and NFTs on Bitcoin aside, the design of the ordinal protocol is inherently, whether it's mildly damaging to Bitcoin or it's massively damaging to Bitcoin, is up for debate, but it is damaging to Bitcoin. The way that we design our protocol is that our protocol is account-based. So your ownership of assets is not tied to individual UTXOs that you have to hold in your wallet. All the assets are virtual assets. So your contract calls are Bitcoin transactions, but those themselves are small Bitcoin transactions that can be consolidated. So we're actually not bloating the UTXO set whatsoever, right? It's the UTXO set, like Bitcoin's meant to be, is supposed to expand and contract over time. And so it's the same way for us, right? We're not making these non-consolidatable UTXOs that tie your ownership of these assets, are tied to your ownership of these assets. Your contract calls are consolidatable UTXOs, which means that the overall size, no matter how many more transactions per block are OPNET transactions, the overall size of the UTXO set doesn't increase over time permanently. So it's not spamming the Bitcoin blockchain in the same way that ordinals is. If your argument is anything that isn't I'm paying for bananas with Bitcoin or I'm sending Bitcoin from me to you is spam, then that's a more philosophical argument. It has nothing to do with the technical side of what's good or bad for Bitcoin. So yeah, making financial incentive to make Bitcoin transactions, as long as they're not transactions that are damaging the Bitcoin network, I don't believe that's spam. That's not my opinion. And like Danny says, kind of like, who cares? When it comes to creating an environment where, there are assets on Bitcoin that might be more valuable than, nothing's going to be more valuable than the cumulative value of Bitcoin itself. That's, I would say, the upper limit of, what the value that can be created here. We've never seen an asset on an individual blockchain exceed the value of the blockchain itself.
But it doesn't have to be the blockchain itself. It just needs to be the transaction in the next block, which gives an incentive to reorg. So the miners right now get 3.125 BTC per block, but if
Yes.
you're going to have like a rare Pepe, which is worth 5 Bitcoin, and the miners are aware of that, there can be like a battle.
But our assets aren't based on UTXOs. Our assets are based on like it's account based. So there is no like the difference with this is like things like rare Pepes or ordinals, etc. Yes, there is minor MEV. There's MEV that is now introduced to try and like fight over that, or to RBF the purchase of a single UTXO, right, to fill the PSPT. But all of our stuff works on contract calls. So even if your transaction gets pushed to the next block, as long as like your slippage is set, or as long as your contract call goes through, you should be fine. The MEV is going to be very weird because there has not been an account-based protocol that is not UTXO based, really in a very long time, maybe ever. There's BRC20 runes, everything else is UTXO based.
Yeah, this doesn't work like Ethereum either, in the sense that there's like a validator that has a copy of the blockchain that can see your transaction, and then we don't know who's going to mine the next Bitcoin block. So MEV in the traditional sense is not exactly possible with this protocol. There's kind of decentralized MEV where you see a transaction in the mempool, and theoretically you can submit a transaction with a higher gas fee and a higher priority fee, which is the transaction ordering that happens after the Bitcoin block. So I'll explain this first before we get into MEV, but basically with any OPNET related transaction, you're paying 3 fees. You're paying Bitcoin layer 1 fee to miners to get your transaction onto Bitcoin. So whatever sats per VByte is, you're paying that. Second fee you're paying is for execution of whatever smart contract you're interacting with. The third fee that you're paying is an optional fee, which is a priority fee. So that's a transaction ordering fee. So Bitcoin block passes. You submitted your transaction with a Bitcoin fee rate that got you into that next block. You're in this block. How do OPNET nodes then process the transactions with that block, within that block? They're not processing them by the order that they get confirmed in that block, because then Bitcoin miners have the ability to just reorder transactions within the block and then just create a total rape, basically. So the transactions within that block are ordered by their priority fee. So it's a transaction ordering fee that's paid that basically says, regardless of where you get confirmed within the Bitcoin block, as long as you're in the Bitcoin block, the OPNET nodes are going to execute based on this secondary ordering fee, not on where you got confirmed within that block, which completely hamstrings miners from being able to engage in this MEV attack vector. So those are pieces to this. Now, when you think about MEV, I mean, yes, theoretically, you can build a bot or something that is tracking where people are sending transactions, and either sending transactions with a higher priority fee than them. But then you as the user have the ability to, well, one, it'll be very difficult to be able to sandwich somebody, because you have to submit a transaction with a higher priority fee than them, just one above them, and also submit a transaction with a priority fee that's just below them to guarantee that you get the sandwich just right. So it's not going to be how Ethereum or Solana MEV works. And then you as the user, the 10-minute block time says you can RBF your own transaction, submit with a higher fee, and now you can unmev yourself, basically. So it's not going to be MEV in the traditional way that we see it on other chains. It's not, I'm not saying it's not going to be possible, but it's not going to be coming from miners. It would be from users, and it would be it would be way harder to do. And there'll be mitigation for it. And I do think that like products will come to the market that help mitigate this as well. Private mempool relays. If you have a very, very high value transaction that you do not want to get have any attack vector for, you could submit directly with a mining pool, and they'll include you in the next block that they mine. I mean, these sort of services, as of right now, are widely underutilized or used to submit non-standard transactions. But I think when it comes to being protected from public mempool activity, that will become a service that becomes much more valuable over time. So like something like Mara will, I think, be able to provide like a really extremely valuable service to the market, and any mining pool will be able to do so.
Right. I still have some questions, but I gotta plug some ads at this point.
No problem.
And I will start by asking you guys if you have Cake Wallet on your phone.
I do not have Cake Wallet on my phone.
if you do get Cake Wallet on your phone, I'm gonna send you each half of a Zcash, which is like $100 right now. And you can swap it inside of the wallet for BTC if that's what you want, or you can ZODL, that's the term for holding Zcash. So yeah, this is my task for you. And I also want to ask you, where do you get your Bitcoin news?
My Bitcoin news?
Yes.
But from a collection of the X algorithm, that's what I would say.
Yeah.
Okay,
Bitcoin University, Matthew Cratter, Bitcoin University.
Oh no. God have mercy on your soul. Anyway, when was the last time you checked out news.bitcoin.com, which is basically the website that 10 years ago was saying that Bitcoin Cash is faster, and it wasn't 10, it was more like 8, but it was saying that Bitcoin Cash is faster and cheaper to transact than Bitcoin. And now they became orange and they rebranded. They know the difference between BTC and BCH. And I tend to think that they have a pretty balanced news reporting. So check it out. I think you guys will be surprised that there's some stuff in there. I'm not sure if there's anything about you. You made some waves recently. Let me check if they actually said anything. News.bitcoin.com about OPNET.
I'm on their website right now. Yeah, it looks like a great website.
I don't think there's anything about OPNET. Maybe I should tell them that you guys are sort of a big deal right now in Bitcoin. I think someone pointed out that more than 20% of the transactions over the last few days were from OPNET.
Yeah,
Yes,
I mean,
indeed.
we anticipate it ramping up significantly. I mean, right now our DEX isn't live, so there's really no way to even trade these assets right now. There's just a few collections minted and a few tokens minted, and people are deploying a lot of contracts, prepping their applications. So I think that we see over the course of the next, few weeks to months, hopefully we want to target that number being at least, 40 or 50% of all Bitcoin transactions are OPNET related. Obviously down the line, we'd hope that that number gets to a very high number, 80, 90%.
I can only imagine the reactions after that happens. Like, there's gonna be like a huge meltdown of the magnitude that we haven't seen since 2016 when Trump won. Just people screaming on camera into the void, being like, rage quitting.
I mean, the idea behind Bitcoin is that, like, if there's enough consensus, then something can be done. So either there's something that happens in regards to scaling, or whether it's ossification and people are okay with the type of activity that's happening, or again, the fee market should price out like any of the super degenerate activity. So if we reach an adoption level of 80, 90% of transactions, then we're seeing major institutional transactions or high value transactions that provide value or utility to the Bitcoin asset. So, I mean, people may be upset, but there's going to be, I think, an equal amount of people who are going to be excited and actively use this stuff.
Yeah. So did you guys install Cake Wallet?
I just did.
Bro, I can't because I have to log into my.
If you set up a Zcash wallet, I'm gonna make the transfer, and I also want to remind the people listening that they have 10 minutes left to pick a number from 1 to 100, which they can type in the chat. I can see both the chats on Twitter /X and YouTube, so wherever you are, I'm gonna see your number, and you only get to choose one number. And if you choose two numbers, only the more recent one is gonna count. So don't try to cheat. Actually, if you try to choose too many numbers, like if you exceed two numbers, I'm gonna disqualify you, because that's really not fair. You should just choose one number. Anyway, another sponsor I want to plug is Layer 2 Labs, and they're trying to build sidechains for every interesting use case out there. They already have the software. It's on layer2labs.com/download. Are you guys aware of Polestor's work?
Yes, with drive chains.
Yeah.
In fact, a theory of ours is that, let's just say Bitcoin ossifies, there's going to be high demand for layer 2 activity, right? Like I maybe shit on some layer 2s previously in this podcast, but I think that if there's demand for scale, then scaling solutions that are good will be widely adopted. And so I think that anyone who is prepared or built or has been working on Bitcoin scaling solutions that aren't like change Bitcoin's code, but building on a layer 2 or secondary layers, anyone who's able to do that in a way that properly scales the type of activity, if we're the catalyst for this, that properly scales the type of activity that we're doing, are very well positioned, I think, for extreme success and adoption. I think that's sort of been our opinion on this, is like, we don't want to change Bitcoin's code. And so scaling solutions seemingly on a secondary layer will be the way that this activity scales over time. So I would love to have a conversation with him, to be honest.
Well, I think the difference between Lightning or Arc or Liquid or other layer 2s and drive chains is that drive chains are paying transaction fees directly to the miners.
Yes.
So if there's 1 million users on some Ethereum drive chain or some Zcash drive chain, then all of these transaction fees will go to the miners, and Bitcoin will only continue to be prosperous. Because I think this is the biggest bet that Satoshi made. It's in the white paper. It assumes that when the block rewards are going to diminish, the transaction fees will compensate. And I don't think we have seen too much of that.
Yeah, I mean, that is our core, what's the why, the real why behind why would we do this, aside from trying to serve a gap in the market, is that we think that there's a reason why people need to be making Bitcoin transactions. As you said, like that's a core piece of Bitcoin's architecture. That's the reason why, that was Satoshi's vision for how the network, after the last Bitcoin is mined, how is Bitcoin going to be maintained? There needs to be a reason why people are using the network and paying fees. So again, that is our why. Why do we build this? To create a reason why people make Bitcoin transactions. And it can't be something arbitrary. So there has to be, it's a permissionless and decentralized system. It allows anyone to build anything. So, someone will build something, whether it's us or somebody else, that creates enough demand for these transactions where the fee market, hopefully over time, fulfills that exact vision in 50 or 100 years of, subsidizing the security of Bitcoin, the security budget of BTC. Because some of the answers I've heard from other people are like, well, governments are going to subsidize Bitcoin mining, or energy is just going to magically become cheap enough, where it's going to be basically free to mine Bitcoin. Maybe. Are we willing to bet Bitcoin's entire viability on a maybe, or on governments just giving free energy? I'm not. We're not. We're two plebs in the market. We have the ability to do this, and we did it,
Yeah, I do like the sound of that. If you want to test the drive chains, the URL is layer2labs.com/download. And I still have to promote Sideshift, which is like the cooler version of Shapeshift. So Shapeshift came along first. I think that was 2016, 17 or something. Eric Voorhees, he became very popular with this, but then he added KYC in 2018 or 19. And there was a moment when a lot of businesses that were integrating Shapeshift added Sideshift. And Sideshift is the cooler one that doesn't do KYC, unless, of course, you sign up and you choose to have an account on it. But it's not mandatory. And until you guys figure out the liquidity for swapping Bitcoin for stablecoins or vice versa, you can do that on Sideshift, and the liquidity is pretty great. They have low fees, and you can even accept meme coins from your friends on Solana or whatever, and then you swap them for Bitcoin on Sideshift. Like, you have a lot of trading pairs, and I think it's interesting. You don't even have to touch the meme coins or whatever. You just paste your Bitcoin address into Sideshift, and then you give the Solana address to your friend, and he thinks he's giving you some sort of funny meme coin, but he's actually swapping it for Bitcoin, and you get that to your wallet, and you just get what you want. Sideshift.ai, check it out. And last but not least, there is Brains Hash Power, which is a service for renting hash power. If you want a 51% attack BSV, don't sue me, Craig. I'm just saying it's possible. I'm not telling people they should do it. But if you want to do something interesting, like try to hit a block with a lottery ticket, I think with like $20, you can rent the equivalent of 1,000 tiny bit axes for a couple of hours. And it can be interesting. Like, you can try lottery tickets to hit a full block. You can try to hit a Bitcoin Cash block if you think you have better chances. The possibilities are endless. And the URL is hashpower.brains with a double I.com. Now, I'm going to ask you, Chad, I saw that you pasted your Zcash address from Cake. let me scan it. Try to show your QR code to the camera. Just a bit farther from the camera. A bit more. A bit more. Okay, got it. So I'm gonna send you half a Zcash. Usually it's a full Zcash for every guest, but I guess I have to split it this time around. There's 2 of you, and I don't want to deplete the budget. So for amount, I'm gonna do 0.5. Why can't I do fractions, Cake Wallet? What happened? Interesting. I'm just gonna send you one because this is awkward.
I'll share it with Danny.
Yeah, I couldn't download it. So
He's in the room next door to me.
Okay. So Cake Wallet really appreciates that you are here and offers you this giveaway of 1 Zcash, which you can hold or ZODL or swap for Bitcoin. It's your choice. And now
Nice.
I have to give 1 Zcash to someone from the comments. And basically I asked the both of you to choose a number from 1 to 100 before we started. And after we reveal the numbers, we're gonna have to decide what we do with them. If we add them, or we multiply, or we subtract, or we gotta do some operation to get a final number. Or we can do an average. What do you think?
Danny, it's up to you.
Let's what if we add the sum of all the numbers individually?
There are only 2 numbers, so
Yeah, but if we have like 55 and 25, you would add 5, 5, 2, and 5.
okay, that sounds like fun.
That's the final number. Nice.
That's good. So what are your numbers?
All right, let me pull it up. I wrote it down. My number is 100.
Mine's 14.
14.
So that's
that would
1
be
plus
6.
1 plus 4. That's a
So
6. Is there a 6 in the chat? So from this point onwards, I'm not gonna count any answers. The one who's closest to 6, and I see a 17. I see a 22, but that's far away from 6. 37. You're not lucky.
Uh-oh.
17 is the closest so far. Oh, there's a 5 from How Hiroki. He said 5. Let's see if there's any number that's closer. If there's a 7, I don't know what I should do. But if there's an exact 6, I'm gonna give it to that person. Oh my god, people actually are commenting and interacting with our conversation as opposed to just picking numbers, which is really nice. I love you guys. 69, nice. 2 people
Close.
chose 69. Scrolling. Okay, someone said 6, but it was like a minute ago, so it doesn't count. Okay, so Hiroki is the winner. I'm gonna contact you, sir. I'm gonna send you a message after this interview. Congratulations, you won. So
Congrats.
at How Hiroki on YouTube, he has like a penguin avatar. I'm gonna send you the transaction after the show. Now let's get back to talking about OPNET. Thanks to all the sponsors for making this possible. And who is this for? That's the best question, because I've seen so many layer 2 attempts, so many protocols, so many rollups, attempts to do sidechains, and they get a lot of hype, or in the case of Citrea and you guys, they get a lot of hate from the BIP 110/44444 guys. And then the launch happens and it's kind of underwhelming. Like, people assume that, whoa, it's gonna bloat Bitcoin, it's gonna increase the transaction fees and whatever. The activity is not as high as expected. Maybe it's the bear market, maybe it's just that Bitcoiners hodl and they don't use the coin as much as we would like. So the question is, who is your target audience for this?
I would say initially the target audience is going to be builders and the tinkerers and the people who just simply want to have fun and do something cool like that. First and foremost, we have made this with like the dream of doing smart contracts and all of the cool fun stuff from every other blockchain on Bitcoin. The long-term vision of what that could be, what we're working towards is like, yeah, institutions and giant funds and asset managers and RWAs all on Bitcoin. But like day one, right now, who is this for? This is for people who want to do something cool with their Bitcoin. They want to do something new. They want to play around. Don't like ape your life savings into the first meme coin you see, but like this is a playground for Bitcoin in a new way that hasn't ever been done before in this way, right? Like the user experience has never been for smart contracts on Bitcoin. I put Bitcoin in my Bitcoin wallet and I go to the website and I just click a button and it works. And it takes 10 minutes maybe like that. It's always been, I got a bridge somewhere. I got to do something else. There's all these trade-offs. So that alone, I think is for anyone who has any kind of interest in playing with their Bitcoin or doing stuff with Bitcoin. It's builders and tinkerers, people who like DeFi, and then long term it'll mature into what we hope to see is more of like any other complex, mature DeFi ecosystem where you have multiple billions of dollars of TVL. But like right now is the fun times, so I don't know why people are getting so angry about it because it's the opportunity to just have fun.
Yeah, I mean, look, this is for anyone who holds Bitcoin. Like if you hold a Bitcoin asset, this is for you. You can use it. You don't have to use it. There will be a lot of things that are built, and there are going to be things that even if you don't like the overall concept, will provide value to you as a Bitcoiner. I would just say keep an open mind, and there are going to be things. We build this to be permissionless, so people are building stuff that maybe people hate. Like people might not, but there may be an equal or less amount of people who really love that shit, meme coins or degen stuff. But at the end of the day, like this is for anyone who holds Bitcoin, and long term, it's going to be for people who I feel like as the ecosystem will mature, it will mostly be used by people who want to use their Bitcoin as productive capital. They want their Bitcoin to turn into productive capital. That is, we're not trying to change Bitcoin to not be money, but being productive money or being able to use your money in ways that doesn't just mean I pay for something. That is still money. Money does a lot of things. Yes, payments is one of them. Value transfer is one, but you can do a lot with your money. And so being able to use Bitcoin in a productive way, that's really like the long-term target audience. But the initial phase of this rollout is going to be, a lot of builders. It's going to be a lot of people building stuff and throwing shit at the wall and seeing what sticks. And we welcome the experimentation.
I think that's a good answer, but we still need to see the users coming. And I see this also like a lightning problem. Like there is no protocol in this whole space that got as much advertising and virtue signaling and forced use at some events than Lightning. It was encouraged, it was pushed. Everyone was trying to run a node for a while. There were like commodified devices that you could buy to run a Lightning node. People were saying that you should switch to Lightning. It was like the biggest thing for like a couple of years. But it still did not take off. Ironically, it was Tron that took off. And
well,
do you see anyone advertising Tron? You don't. Do you see anyone saying, oh my god, I feel so free because I'm using WBTC on Ethereum? No, but that's like 50 times bigger than Lightning.
Yes.
Yep.
I mean, again, it really begs the question of, is Bitcoin a really viable currency for payments? That's the question, right? Lightning was the solution, the widely championed solution to bring the answer to that question. And Bitcoin is going to be for payments. We're going to buy everything with Bitcoin. But I mean, it's not like there's a world where that doesn't happen. But I do think that there's a lot of work that needs to be done that is very hard work and not rewarding work that needs to be done to make that happen, including like building full circular economies around BTC, where you're getting paid in Bitcoin and you're spending it, and everywhere around you, everyone's transacting in Bitcoin. So that, because again, like the fallacy of I'm going to use my Bitcoin as payment, but also Bitcoin is like the store of value, is that if Bitcoin's going to go up to $1 billion, which is like the mindset of holding BTC for the long term, or $2 million per coin or something. Well, why would I buy my banana with Bitcoin now? Just like the guy who bought pizza with Bitcoin and then that he lost out on like $200 million. Like, why would you do that? It goes against two of the fundamental principles that most people who hold Bitcoin are using, which is that Bitcoin is this asset that's going to go up to $1 gajillion, but also this is like this great payment method. So yeah, I mean, again, I think that until we get to a point where fiat currency fully collapses and we need this decentralized money, there needs to be a reason why people are using the Bitcoin blockchain. I mean, we're trying to provide an answer to that says you can use your Bitcoin in ways that potentially can make you more Bitcoin, or utilize your Bitcoin in new and novel ways that don't require you to just, trade Bitcoin, which is this value, this asset that's going to go up 10 or 20 or 100x over the course of the next 10 or 20 years for a good or a commodity that you're just eating or something. So, I mean, yeah, I mean, we're trying to fill that gap. That's really a core reason why something like this, I think, has demand in the market, or will have demand in the market, because, yeah, I mean, we've seen Lightning adoption. I'm fully with you on that one. I mean, they changed Bitcoin to really facilitate Lightning. Taproot was really there to make Lightning happen. So yeah, I mean, it just hasn't happened so far. I mean, I think if it becomes, for me personally, like, why would I use the Lightning Network and download a new wallet and deal with their UX, et cetera, if it costs me basically nothing to make a Bitcoin transaction right now? I don't care about waiting 10 minutes. If I need to send Bitcoin from me to Danny, I'm not using the Lightning Network. I'll just use the Bitcoin Network. It's like 0 sats per VB for the past like 4 weeks before we launched OPNET. And then it's like anywhere between 1.5 to 5 sats per VB right now while people are just deploying stuff. Once people start trading and more complex applications become built and it costs me $10 or $20 or $30 to make a Bitcoin transaction, then maybe I will use the Lightning Network where it might be extremely cheap to send my Bitcoin to Danny or something. But yeah, I mean, I just think that there needs to be like a better use case for why would I use the Lightning Network if I could just use Bitcoin right now?
That's a good point, but we still have to see it in practice. We have to see it happen. I believe that usually, most of the times, Bitcoin doesn't have a tech issue. Like, there's a lot of good stuff that's being built. It has a culture issue with people who are very much against anything that they learned like a decade ago, and they got so anchored into that stuff and they just wanted to see it happen. But my question to you right now is, if we're going to have Bitcoin as this financial layer where people are going to be doing all of these operations where they borrow stable coins, they do DeFi on Bitcoin, they do everything that you see today on Ethereum on the Bitcoin based layer, is it still peer-to-peer electronic cash, or is it like some sort of bank replacement?
I mean, I think it's a good question. Danny, do you have an opinion on this before I give mine?
About Bitcoin being a bank, like is it a replacement for fiat? Right? Just that's the basis of the question, right? Is Bitcoin a viable replacement for fiat?
Or if we have OPNET and everyone's just using Bitcoin in apps, for example, does Bitcoin change from the white paper?
I don't think so at all, because Bitcoin already is not what the white paper is. Like this is where you get into like what is Bitcoin and what is BTC versus what is Bitcoin, because Bitcoin is not at all today, the Bitcoin Core V30 or whatever is not at all what the white paper laid out 16, 17 years ago now. It's gone through so much change. This is like a piece of code, right? It's not the same code that was spec'd 17 years ago. It's maintained by people who had nothing to do with creating it. And there have been multiple forks where like old versions of the code have forked off. There's basically Bitcoin Cash and BSV, right? Is like, those are also Bitcoin, but they're just not BTC. They are BCH and they are BSV. And the one that is called BTC is the one that everybody calls Bitcoin now. But even that is really not Bitcoin. So the really schizo take is that, like, the closest thing to Bitcoin, actually, like what the white paper laid out as a concept, is something like MakerDAO, like a decentralized stablecoin that is a freedom money. That to me is what the white paper. So the white paper laid out an idea of like freedom money and a freedom network. It was all based around nobody can stop this, and there is value to it also that can't be controlled. And so, no, I don't think Bitcoin even today is the Bitcoin from the white paper. And I don't think that. Again, I just don't like to a lot of the time. I see people on the timeline, right, in Bitcoin Twitter, just like go on. They will spend hours debating about like the white paper or what is Bitcoin. And I have done that in my life, been in Bitcoin for a long time, but I just don't see any point to it anymore because, like, no, who cares? Who cares if it is what the white paper said or not? It's the same answer to the Bit 110 guys. Like, who gives a shit? Nobody. I don't think BlackRock or Michael Saylor or the other or Foundry, like, they don't care about what any of us have to think about it because they are playing the game of Bitcoin not on ideals and beliefs but on incentives, and that is all that matters. Like, because Bitcoin is money and value is introduced into how the thing evolves and lives. Literally, the only thing that matters is incentives. And if somebody has a problem with the thing that I'm doing or you're doing or Chad's doing or we collectively are doing, because they are mad that the incentive model of that thing is better than their incentive model. Like, the Bitcoin as payments and as transactions is the least valuable thing that Bitcoin Layer 1 could ever be used for. Like, nobody, Bitcoin, with it being a transfer for Bitcoin, is the only thing that Bitcoin should be used for, is like 200 transfers every hour. Nobody actually does that because it's slow and it's expensive and you can't do anything with it. There's no programmability. So the incentive model for Bitcoin right now is totally broken, and nobody said, there is no law that governs that you are not allowed to do this stuff. So I don't care. I don't care if it's in the view of the original white paper or not, because it doesn't matter. The only thing that matters is incentives.
That's right. Yeah, I mean, I couldn't say it better myself. Like, we are not going to be the driving force for Bitcoin not being what the white paper laid out. Like, the white paper laid out something that's not what Bitcoin is exactly today. The idea of Bitcoin in the white paper was not, oh, everyone's just going to hoard this asset to infinity and then it's like going to go up forever because there's only 21 million of them. That's not what the white paper laid out. So
there's not even a mention of the 21 million coins in the white paper.
No,
yeah. So that's like, if we're talking about, are we going to be the ones who changed Bitcoin to, we're the catalyst in this? I don't think so. I think that we're actually being more true to what Bitcoin is supposed to be, which is it's a network that's supposed to be used. So we're trying to provide reasons why people are going to use the Bitcoin network. That's our mission. Our mission is not to change Bitcoin at a code-based level. We're trying to provide more use cases for what you can do with Bitcoin, not just the asset, but with the network itself, and provide incentives for people to do so. And not only for people to do so, but people to build things that make people do so, right? Again, everything about this is supposed to be an incentive-driven system. So an open source protocol that's permissionless allows anyone to build stuff. There should be an incentive for people to build things that provide value to the market. It's up to the market to decide, did someone build something that provides value? Then will I use it? That is really the basis of this entire system that we've created. And again, we have no grand political mission to change Bitcoin's code or anything like that. We're allowed to do this. Bitcoin allows for you to do this. And we're going to do it because I think that there's one demand in the market for it. And I think there needs to be a reason why people make Bitcoin transactions. And yeah, store value is not a core tenet of the white paper. And that's what Bitcoin is today. So people just hoard it and they don't use it. And that's also not Bitcoin.
But if you're going to be using Bitcoin as a collateral asset or something that people use in DeFi, it's still sort of a store of value because it's not the direct asset that people use for payments. It's just the asset that people use for taking loans or for participating into something that's going to use a stablecoin economy.
Absolutely. I mean, listen, I would say that we're not, again, I'm not trying to change how people even I'm not even trying to change the store of value narrative either. I mean, again, that's an emergent narrative that came around about BTC and has given it a lot of gas in terms of its, adoption in the wider financial world. I mean, I think that there's a number of things that can emerge from this. And I think one of them is again, if you price payments for goods and services, which people don't really use Bitcoin for right now anyway, but if you price that out of the Bitcoin market and there emerges to be demand for it, where are people going to be forced to do this? On Lightning Network, the rails that were widely championed and hundreds of millions of dollars were poured into the development of. Okay, that I think is very bullish for Bitcoin as payments if you are interested in, Bitcoin's adoption on a wider scale in terms of a payment method. That can be a catalyst of our protocol. It's not something that we built the protocol to force per se. That wasn't our original motivation, but that will be that can be a potential conclusion or indirect result of the protocol gaining wide adoption. I mean,
yeah, but Bitcoin as payments is retarded. Like, I'm sorry. Like, it's stupid as fuck. Like, nobody ever is going to do that ever. It doesn't work because Bitcoin has turned into this gold thing. Like, nobody uses ETH for payments, and it's way cheaper and faster already. Like, nobody's ever used another moving priced asset as payments. That just doesn't make any sense. That is like, oh my God. Part of the problem with the like people who look to the white paper for an answer is they're like literally incapable of thinking about the white paper as being this one specific person who is the guy who made it. So he has some merit to what he thinks for sure, but it's just it's just what he thinks about it. Like, he also, Satoshi Nakamoto, does not control Bitcoin. He made this thing, the system that he put out into the world. And at the end of the day, at a certain point, his level of control over it was so little that he fucking left the whole thing. Like, so everyone who like looks to try and see, this one opinion of what this tech is, which is not what it is now, that is this wholly like protected idea that needs to be so sacred and abide by our interpretation. It's like people talk about the Bible. Like, it's just it doesn't matter. It's one guideline to understand what this technology of Bitcoin is that is in the original white paper. It's not even fully accurate because Bitcoin is not most of what that is now today. And anyone who tries to tell you that you can't do stuff because of some reason that isn't like the code says you can't do that, some reason that is ideological or religious almost, is just like totally retarded. For lack of better term, I literally don't care what you have to say to me because there's nothing you can do to stop me. Like, you have to kill me. Like, nothing you do to stop any of this because the code says you can. So it's fair.
Yeah, I think the broader question is whether or not Bitcoin is and will stay permissionless. Whether or not you can build without asking others what they think about it, or whether or not it should exist on Bitcoin. I think this goes all the way back to colored coins and Satoshi dice, and some early applications that were built and got traction. USDT was initially also built on Bitcoin. We sort of kicked them out, and people were complaining in 2018 that a large percentage of transactions on Bitcoin are USDT transactions. And that's when they decided that they should switch to Ethereum, and then they went to Tron and Solana. And right now, I think the transaction volume of USDT is usually 2 times bigger in a 24-hour time frame than Bitcoin's, which proves that there is demand for this. And I think in the history of Bitcoin, we have this tendency to get something very cool that gets a lot of traction, and then some of the very concerned people decide that it should not exist on Bitcoin. So the question that I have for you is, what is it going to take to intimidate you to stop building this on the Bitcoin-based layer?
Nothing. I mean, you can, again, you can build. If you want to stop us, you have to kill us. That's really it. Like, if you want to stop us, you have to kill us. That's it's not going to stop. Like, and if you want to change,
is it going to stop if they kill you? That's the other question. Like, is
also
the
kind
cat
of
out
not.
of the bag?
Yeah, also kind of not, because the protocol itself is an open source and permissionless protocol that you can kill us and it'll still exist and it'll still function just fine. You just won't have us coming onto podcasts and shilling it, But it's built to be part of Bitcoin forever. It is attached to BTC. It works on Bitcoin. You can change Bitcoin, and OPNET still works. Though you would have to change in order to stop OPNET for real. You would have to change Bitcoin so that regular Bitcoin transactions also don't work on Bitcoin. You have to fundamentally shift Bitcoin into something that is so different and so bastardized from the original version of BTC that it is completely no longer Bitcoin whatsoever. And the only thing that it has in common with the original Bitcoin is the asset ticker. And that is what you would really have to do to stop OPNET actually. But again, like, I don't want to position this as an antagonistic thing to BTC. Again, we see this as something that's really positive for Bitcoin. And I think that over time, history will prove us right, that we are putting something out to the public that brings more use cases for Bitcoin and brings wider Bitcoin adoption. It also brings and sucks liquidity and mindshare and developer talent away from non-Bitcoin chains, which is also a huge problem in the Bitcoin ecosystem, is that there are few developers, and the few developers that are here sometimes get chased away. So there needs to be, and there's not great incentive to become a Bitcoin developer. So what brings developer mindshare to BTC? Financial incentive to build something great. And we're not giving the incentive, we're just providing the protocol that the incentive system already exists. So yeah, I mean, don't kill me, please. But even if you did, you really couldn't, and it's not really going to stop it either. You would effectively have to kill Bitcoin to stop OPNET.
Yeah, I've heard a similar argument about Counterparty. And I also want to point out that there's this poetic justice dimension to Bitcoin protocols, because, for example, colored coins, I think initially were designed so that they can isolate black market activity from like legal activity or whatever, just so that they can mark coins from the Silk Road. And it never ended up being used for that. It inspired Ethereum instead. And then we had Counterparty, which was this idea to create companies that are issuing their shares on Bitcoin, and you can have these decentralized marketplaces where you can trade commodities, and you can have all of these betting markets. I think that was also part of the experiment. And in the end, it was used mostly for rare Pepes and Spells of Genesis, which are some of the most legendary collections, and also Bitcoin heads. Check out btcheads.com. That's my collection. Anyway, there's also Omni, which was initially, I guess it was supposed to be like a better version of Counterparty, and it had sort of the same goal to create decentralized companies on the blockchain, and it ended up being mostly used for USDT. And that's where it got born, and that's where I think it was the most successful token out there. And nowadays it's not being used for anything. And then ordinals and inscriptions were created for the purpose of putting JPEGs on the blockchain, but they ended up being used for much more interesting stuff. Like, they sort of indirectly inspired BitVM. And also, you guys are using some of the same technology to put smart contracts into Bitcoin. So if NFTs and stupid JPEGs and whatever the nuts people are complaining about ended up creating a smart contracting layer on Bitcoin, I think there's a silver lining to that.
We hope so. We hope so as well. I mean, again, I would love for a future where you don't have to go to traditional financial markets to purchase stocks or assets, and you can get exposure to everything Michael Saylor is doing natively with your Bitcoin without having to leave Bitcoin, or you don't have to sell your Bitcoin if you need capital. You could just take a loan out against it in a decentralized way without engaging with a centralized party. I mean, like, that would be a future that I would really look forward to. And yeah, I mean, we'll just have to see the emergent use cases for this technology. As you said, like, as the ones who came up with the idea for this, or who pushed it through and made it happen, like, we have no real concept as to what the main adoption of this technology will actually be. We have our ideas for it. We've built out, tools and DeFi protocols, et cetera, that we think will provide value and leverage our technology in a way that will provide use cases. But I couldn't tell you, with 100% certainty what people are going to be using this in 1 or 2 or 5 years for, if they're going to be using it at all.
You actually have an interesting question which has an obvious answer, but I still feel like it's useful to address it because I think many people think about this. So let me find the exact comment. So it's from ARUPB. I'm not sure how you're supposed to read that. But he says, is there any airdrop rewards or team token allocation for early users?
There's no token for OPNET. There's like applications that are building that have tokens. So like there's a DEX. We built the DEX. It's called MotoSwap. That is the Moto token. There's a community, like the first OPNET token, OP20 token, is called Orange Pill. They did have an airdrop, and I think the token is still minting now for another day and a half. And there's a ton of others as well. Like there's people doing. We had a competition called VibeCode.finance, and there was over 400 dApps that entered. 122 of them had deployed smart contracts, and probably between 50 to 60 of them are like stuff that could be deployed day one. So there's a ton of stuff launching right now. There's one that just did a pre-sale called Sloam, which is a fork of something called Olympus DAO on Bitcoin. They raised $250,000 in under 24 hours, which is pretty nasty. It's pretty cool.
Yeah, I mean, there's not incentives from us, but there will be a lot of opportunity, I think, from early adopters who engage with early projects and stuff. I mean, I think that model has proven to be somewhat viable for user retention, airdrops, etc. So, again, I would engage directly with projects or teams who are building stuff to get like a specific answer for that. But I think there's also like, the more you're involved with the community around the developers and within the OPNET community itself, or like the MotoSwap community, which is like our community that we've cultivated for the DEX application, the more clear of opportunities if you're like hunting early airdrops or trying to, be an early adopter, you'll be able to find those opportunities much more clearly if you really get involved.
There's also Neo in the chat, and he's asking, are OP20 tokens fully native and secure compared to BRC20?
Yeah. So they are fully deterministically exist on Bitcoin layer 1. There is no indexer mismatching that can happen.
It's actually way more secure.
Yes. Short answer, yes.
Yeah, it's way more secure. For example, there have been multiple instances of indexer mismatched states with BRC20 that have had to have complex political resolutions across those who run BRC20 indexers, because BRC20s are ordinals, which have this off-chain ownership on the ordinal indexer, and then they build a second indexer to index the ordinal indexer, and for a specific type of ordinal inscription that is the BRC20 standard. So you're like 3 levels off of BTC, and there's no consensus across any of these. So again, you're relying on centralized sources of potential truth. So that's not really super secure at all when it comes to BRC20s. OPNET is completely different. Everything is immutable and provable and deterministically executable on Bitcoin with smart contracts. So that is, yeah, short answer is it's far more secure, actually.
Interesting. So there's also another question from ARUPB, and I was meaning to ask this also. So what DeFi applications are live now, and what's the real fee experience?
Yes, so there is staking live for the MotoSwap Moto token that just launched yesterday, and then the MotoSwap DEX itself will be launching later this week, and then that's kind of when all of the suite of different coming.
Yeah, so that's what we've made. We made the MotoSwap application. You have Bitcoin to token swaps, token pairs, liquidity farming, yield farming, easy deployment of tokens and those types of farms as well. That's like kind of that is like a core pillar of any. If you have assets on Bitcoin, you have to be able to trade them for BTC somehow. And so that is kind of like the first thing that you'll really be able to do. So there's nothing live right now, but aside from the staking, but this will go live this week. And then there's going to be a ton of stuff that launches, a bunch of stuff that's going to launch on top of that, building off of that tech, but also a bunch of other applications and use cases. I mean, there's bridging assets from non-Bitcoin chains to BTC, because now you can have, instead of wrap Bitcoin on Ethereum, you can, I mean, there's not a ton of use case for this, but just from a theoretical standpoint, you can have wrapped Ethereum on Bitcoin now in the exact same way, right? But, you know, obviously early use cases for this would be like stablecoins or other assets that are not on BTC can bridge easily to Bitcoin now. There's going to be all sorts of DeFi applications that launch over the course of time. I mean, you can check out, there's a ton on Twitter. There's like, again, there's a few hundred applications that are either in development or ready to launch soon. So, you know, obviously I would do your own research and check out, make sure projects get audited properly. And you're kind of, again, these are individual teams that are not us. So you would have to make sure that whatever you're engaging with is, you have to do your own research on them. Obviously AI tooling is, I think, really helpful in regarding to sussing out the safety of whatever smart contract you're engaging with or application you're engaging with. But yeah, that's sort of there's going to be an emerging ecosystem of a ton of builders. It's just, you know, we just launched this protocol last week. So a lot of people are deploying now or finalizing audits or starting their builds now. So we'll see, I think, a hockey stick of activity over the course of the next anywhere between 2 and 6 months.
Yeah, it's good that you're committed to this and you're optimistic about it. And I'm also happy with the questions from the community. They're amazing. Another one that I have is mostly connected to a piece of FUD or criticism that I read on Twitter, which said that your protocol is basically AI slop and it's vibe coded or something. So you guys said that you were in development for about 3 years and you spent a lot of money on audits, but what's the story? Like, did you code it manually? Did you use AI for creating this?
None of this was made with AI. No, we made something called vibecode.finance, which is it was just a competition that we, like a builder competition we did that used, we encouraged people to use our MCP that we built called Bob, which is trained on Bitcoin and OPNET documentation, how to build stuff. And we gave it to them as like an easy starting point to build stuff, right? So we did a competition called vibecode.finance, and some of the Bit 110 guys who are just like old retarded boomers, they just didn't know what any of that meant. And they were like, oh, OPNET was vibe coded, which was very funny.
Yeah.
Very funny accusation.
There's a pattern I see in regards to a lot of these fellas on Twitter using AI, but I don't think they really truly understand how to use AI. So there's like an element of bias that AI will put on whatever responses it's giving you based on based on the prompting that you're giving it. So if you're giving it a prompt that is asking it to respond in a way that's biased one direction or another, it's not going to give you an objective source of truth. There's prompt engineering that you have to do to make sure that AI is answering in an unbiased and objective way. And you just see a lot of people not doing that. And so they'll just like post some AI response or AI analysis of something because they prompted it like, tell me why this is really, really bad. Tell me, give me all the reasons why this is really terrible. And then AI will just like slop out a bunch of like totally made up shit. That's just confirmation bias. But this is like, you know, pretty classic, like non-technical approach to new technology, right? Like some of these people would be the same people who like had relationships with their AIs and stuff because like the AI was telling them that they're so great and so smart and stuff or whatever. And like then ChatGPT changed the model and it was less affirming to them. And then they're like, that was my best friend. So yeah, I would say we see a lot of that out there. But yeah, no, this was not coded with AI. That's psychotic to say. If you actually analyze the GitHub you'll see that that's just simply not the case.
Okay, so how many developers are currently on your team? And to which extent would you say that the protocol, which is called OPNET, for those of you who tuned in later and can't read the title for some reason, so to which extent is it censorship resistant or decentralized? Is it possible for users to run an OPNET node to make the data more resilient, or to have some redundant storage for it? Or is it possible to just nuke one server and the whole system makes no sense anymore?
No, it's a fully decentralized system. So there's a network of OPNET nodes. Right now, we operate about 12 of them. But anybody can run an OPNET node. We have full archival nodes now. We plan to have a version of the light client out sometime in the next 6 to 12 months. The archival node is very intense right now. It's about 4.5 terabytes because it indexes every UTXO and every single Bitcoin pub key that has ever been revealed ever. So a shit ton of data. And if you're not in the game of using data centers and stuff like that, I would just wait until the light client is out. You can run like a 90 to 100 gigabyte, what we hope, sized version of the node. Yeah, I mean, there's one big the main mastermind developer behind OPNET is magical mysterious man, goes by the name Anakin. And
Twitter at Anakin.
He's got Twitter at Anakin.
ANAKUN.
If you go look at his GitHub, you will see this kid is an absolute machine, crazy, 1000x dev. And yeah, if you think that an AI could do that kind of stuff, you're kidding yourself. So that's what we got going on over here. I do think we have to go. I'm sorry, we had other I didn't realize it was already 11. Was there any other final questions? I can't see the chat. I don't know what the chat is.
Yeah.
Yeah,
The team is
there are
around
actually
12.
two questions. One
team's
is very
around
short,
12.
the other one is a bit more complex.
Yeah, no problem.
Well, what just happened there? I got balloons. Anyway,
You said some balloons.
There's like 12 developers on the team though, just so it's like there's a full team of developers behind.
So
us.
the question, which is more difficult, is can you FUD yourselves and basically present the biggest criticism to your own work so far that you're planning to fix? And the short and easy one is, where can people follow you and keep up with what's happening with OPNET? And I also forgot to ask you what kind of wallets people can use today, like what kind of UX and whatever. So I guess I have 3 questions and you don't have much time.
One more time, I'm so sorry.
FUD yourselves, tell people where they can follow you, and what wallets can they download today to try OPNET.
All right, FUD ourselves is we're Jewish Israeli baby. Yeah, all of that, whatever you want me to do, 666, all of the devil stuff. And we're trying to take over Bitcoin to have it for our Satanist want of smart contracts and Bitcoin. That would be my FUD. All that's true. You can look it up. Look it up, man. You dig hard enough on the internet, you'll find all of that's true. Where can you use the protocol? We have something called OP Wallet, which is just a normal Bitcoin wallet that interacts with all of the OPNET apps, MotoSwap, the DEX, and other sorts of cool stuff. And what was the third
wallet
one?
can integrate OPNET though. They just have to choose to do so themselves. Cake Wallet next, maybe.
They could, maybe.
Cake Wallet,
maybe.
integrate OPNET. Go ahead.
So what was the third?
Where can people follow you?
Follow us on Twitter, OPNET BTC. That's where pretty much everything we do is. And MotoSwap on Twitter as well if you want to swap some tokens. And check out vibecode.finance if you want to see the ecosystem so far.
Okay, but still, if someone wants to try OPNET right now, what's the best way to do it?
Yeah, get the OP Wallet app, which is in the Chrome store. It'll be in the iOS and the Google Play Store soon as well. And then go head on over to motoswap.org and you'll be able to start swapping some tokens on Bitcoin Layer 1.
And if you want to be a real blockchain surfer, you can go to opscan.org, and that's where you can see all the smart contracts and all the tokens and all the activity that's happening, and track all the transactions and do all that super fun stuff. If you're a researcher. So yeah, that's pretty much what it is. It's not a bridge, by the way, to the wallet either. Like, you can import your existing Bitcoin seed phrase into the wallet, and it's just a Bitcoin wallet. It just has built-in OPNET support.
Sounds good. Give that a try. Thank you very much, Chad. Thank you very much, Daniel. Did I get that correctly? I can't.
Yes, sir.
I'm the Danny. I called you Daniel. I'm so old.
It's okay. It's okay.
Thank you very much. I'll see you in the next one. And thanks to the sponsors once again: Cake Wallet, the ones who gave away the free Zcash; Sideshift.ai, where you can swap your coins before these guys have good liquidity; Brains Hash Power, which is where you can rent hash power for whatever tiny project you may have; Bitcoin.com News, where you'd read the news; Layer 2 Labs for the future of Bitcoin. I'll see you in the next one. Thank you very much. Subscribe.
Thanks, guys.
Take it easy.